Hello traders around the world. Listen to this useful information for you and be careful in your trading decision. Trading psychology, mastering your emotions and instincts for successful trading. Trading is a complex endeavor that involves understanding financial instruments, charts, patterns, market conditions, risk management, and plenty of other factors. But becoming a successful trader requires more than technical knowledge. You also need to develop the right mindset to navigate the psychological intricacies of trading. The nuances of human emotion, instinct, and behavior can profoundly impact your decision-making process. That's why it's important to understand your own unique trading psychology. Managing emotions, the trader's inner struggle. One of the most significant challenges traders face is managing their emotions. Fear and greed drive many trading decisions. They can cloud your judgment and disrupt your ability to make rational decisions. Fear can paralyze a trader, preventing them from taking necessary risks. Yes, all trading requires some risk in pursuit of profits. Greed can lead to impulsive and reckless trades. Let's look at some of the common trading issues that stem from fear, greed, and other common human emotions. Fear of missing out. FOMO. FOMO is a well-known psychological phenomenon that affects traders of all experience levels. It refers to the fear of missing out on a potentially lucrative trade or market move. When traders succumb to FOMO, they may impulsively enter trades without conducting proper analysis, leading to poor decision-making and unfavorable outcomes. Following the herd. Fear and greed often fuel a tendency to follow the crowd, especially in times of market volatility. Traders may be inclined to enter or exit positions based on the actions of others, rather than their own thorough research or analysis. This herd mentality can result in entering positions at the wrong time or exiting prematurely, as emotions drive decisions rather than rational judgment. Impulsive trading. Emotional impulses can lead to irrational and unplanned trades driven by the desire for immediate results. This can lead to overtrading, which in turn leads to increased transaction costs and reduced overall profitability. Overtrading can also result in emotional exhaustion, leading to poor judgment and precipitating further mistakes. Ignoring stop losses. The fear of realizing a loss can cause traders to ignore predetermined stop prices or exit points, price levels, where they'd planned to exit a position. But hanging on can expose them to even larger losses if the position continues to move against them. The reluctance to accept a small loss can lead to more significant financial setbacks in the long run. If you enter a position with a stop the bleeding level in mind, set a stop-loss order, and if it gets triggered, accept it and move on. Chasing losses. Driven by the hope of regaining lost capital, traders sometimes double down on risky positions or hold on to losing trades for longer than necessary. Chasing losses increases the potential for larger losses and often causes traders to ignore risk management altogether. Jumping the gun on profit-taking. On the other end of the spectrum, some traders may pull the trigger too early on profitable trades, exiting prematurely out of fear or impatience. The fear of giving back profits can hinder potential gains and create a cycle of missed opportunities. One thing that sets successful traders apart from those who struggle is the ability to cut losses early and let winning trades run. Understanding your trading psychology. Every trader possesses a unique combination of traits, beliefs, and psychological predispositions that influence their trading style. We'll call this your trader DNA. Understanding your unique trader DNA is essential for tailoring a trading approach that aligns with your individual strengths and weaknesses. It can be hard to evaluate yourself objectively to identify and confront unproductive and unwanted personality traits, but it's often those traits that cause us to struggle in the market. For example, if someone is stubborn in their everyday life, that same stubbornness may cause them to hold on to losing positions for far too long, hoping for an against-the-odds reversal. This refusal to accept losses can result in substantial damage to your trading account. Experiencing a losing trade can be emotionally challenging, a blow to the ego, which sometimes leads a trader to take the loss personally. This type of emotional attachment frequently results in revenge trading, where traders aim to recoup losses impulsively. You can change your trader DNA. Certain psychological traits can cause you to struggle with consistency and profitability. Fortunately, your trader DNA is not set in stone. There are ways to change it. To build a healthy trading psychology, first acknowledge any negative or counterproductive traits you may have, no matter how uncomfortable that may be. Once you've identified your key traits, positive and negative, be more mindful of them and notice when they're occurring. If you recognize that you're about to stubbornly dig in on a losing trade, you can catch yourself, cut your losses, and move on. Or if you sense you're taking a loss too personally, remind yourself that your personal worth is separate from your trading. The goal is not to eliminate your emotions, but to understand them. The more honest you are with yourself, the more in tune you'll become with your emotions, and the better you'll be able to minimize their negative effect on your trading. The bottom line. Trading is risky, and it's not for everyone. But if you're interested in making a go of it, have the talk with your brain in order to develop a trader mindset. Mastering trading psychology is a crucial component of achieving consistent success in the financial markets. By understanding and managing emotions, avoiding common pitfalls, and embracing individual strengths and weaknesses, traders can elevate their decision-making process. Through discipline, self-awareness, and emotional intelligence, you can unlock the potential of your trader DNA and develop a healthy trader mindset.